Hello, everyone, and welcome to another episode of the What the Finance podcast. And on today's podcast, we are happy to be hosting Herald van der Linde, author of the recently released book, Asia's Stock Market from the Ground Up. And Herald has 26 years experience analyzing equities throughout Asia and a brief stint in South Africa as well, and is currently Chief Asian Equity Strategist at HSBC. So Herald, thank you very much for joining the podcast.
Yeah, and thanks for having me on.
You're welcome. And just to my first question, sort of what was your influence for writing the book?
The reason I wrote the book is actually because I had a friend of mine who was a pilot. Actually, the stories in the beginning of the book, he's a pilot, and he had saved a bit of money. He knew everything about flying Airbuses and Boeings and stuff like that. And on a dinner, he said to a few people, listen, I sold an apartment, got some cash. What should I do with it? And he got all sorts of advice. And by the time I was supposed to tell him what I thought, the conversation is somewhere else. So at the end of the dinner, he came over and said, listen, you haven't told me yet. And I said, well, I think you should buy an ETF. And his wife then picked him up. They wanted to go home. So we never really finished that particular sentence. But the day after, he called me and says, about that ETF, what is that? And I said, okay, that's fairly basic. It's an exchange traded fund, and it's a way for you to buy the market very cheaply, and you're diversified in one go kind of thing. It's kind of a fund that is listed. Okay, he'd never heard of it. And this is just one story, but there was more of these kind of stories. People who are, another friend of mine is dentist, for example, who know their stuff in their respective kind of areas, but have no clue about finance, but still need to know something. In addition to that, my own son is maybe even a listener of your podcast. He's 21. He's a student in Amsterdam, but he doesn't study finance. He wants to go a completely different way. But I've always talked about investment with him, and he and his friends are kind of into it as well. So I thought there's actually good demand for people to know about Asian stock markets, because there's a hell of a lot of retail investors these days in Asian stock markets that are trading stocks, but they can't get proper access to information or analysis and stuff. And if they can, very often it's very technical stuff. That's the stuff that we write for institutional investors, all very technical analysis and number crunching and all stuff like that. And most of my friends or my son wouldn't be interested in that. So I thought there's actually maybe a need for a book that just, very easily explains how Asian stock markets work, how they're different, how you have to think about them, how you can invest in them as well. And voila, there you go. You put it on paper. Somebody told me, the art of writing is to put your ass on the seat. You sit down and you start writing and see how it goes. And that's exactly what we did. And the book was the result.
Yeah, perfect. And that was one interesting thing that I think sometimes people think like, oh, I'm going to diversify in Asia, and they might, all the ETFs are mainly Chinese stocks. And I think that's something that maybe a lot of people miss out on, that diversification across the whole continent, because it is such a diverse place. So
absolutely. It's extremely diverse. And the advantage as a retail investor is that you can actually invest in all markets, including places like Bangladesh. So if you're sitting on $5 billion and you move $100 million around every day, and I hope that's the case for you. That's definitely not the case for me. But if you move that amount of money around, certain markets are uninvestable because they can't just deal with that sort of money. That is really where pension funds are, right? But if you're a guy who's got a couple of thousand or maybe even a couple of $100,000 to invest, you can go to Vietnam, you can go to all kinds of places. These markets are big and liquid enough for you to play around in. So that's easy. And yes, Indonesia is very different from China, and Korea is different from India. And if you understand that, you can actually play with that to a certain extent. And that's where the attractiveness lies in the Asian stock market. You can use that to your advantage.
Yeah, definitely. It's something that you mentioned in the book, that there's, in some countries, there's so many small caps that really aren't analyzed at all. So there can sometimes be those, price disparity between the actual company and then what they're producing. I know that's a very
absolutely
broad statement, but yeah.
No, absolutely. So I have a friend of mine who sits in Indonesia, and he runs a small fund. It's called the Komodo Fund. And his job is really to look at smaller Indonesian companies that nobody looks at. And he picks them up for cheap. And then he sits in it and waits until they get re-rated. And he's done very well on the back of that. And you can buy that fund, but you can do that yourself as well. If you're into stock picking, you can do that yourself. You can do that in Japan. You can do that in Indonesia, all sorts of markets. And because actually a lot of the new retailers in the Asian stock markets are locals, local Indonesians, local Japanese, local Koreans, local Indians. They know these small and mid caps. much more. So we've actually seen that a lot of these kind of smaller and mid-sized companies have performed very well, and liquidity has done very well in those segments of the market, simply because the locals are now trading in them. Yeah.
Yeah, definitely. And I think that's something that I recently did some research, and in the US, I think it's 25% retail traders control the equity market. But if you look at Asia, in your book, you're mentioning between 40 and up to 60% of, or maybe even higher, of the actual markets are retail traders. So as you said,
absolutely.
They do have,
Yeah, they're very high. So in Korea, it was over 70% about 12 months ago, and at the moment, so we're talking now early, what is it, January 2022? It's still about 65%. So in Korea, in Taiwan, in India, Indonesia, it's rising, but it's also very high. I think it's about 40% there. The only market where actually this is always been the case is China. China retail has always been really big, and actually there the institutions are growing, the pension funds and stuff like that, because the government's setting that up. The rest of Asia, retail investing is really big now.
Yeah, definitely. So I guess we should take a step back and maybe talk about, how did you end up in Asia? Because I think you're from the Netherlands, so that might be an interesting story.
Yeah. Well, actually, I was a student in the Netherlands. I studied economics, and I always wanted to go to Ireland. I don't know, I've forgotten why, but I wanted to go to Ireland, and I got a job to make French fries and French fried kind of burgers and stuff like that in the middle of the night for construction workers.
Okay.
And so I had to start at about 3 a.m, because these guys were finished by 5, and they were hungry. They had worked on roads and stuff in the middle of the night. I did that with another guy, but the other guy was, for reasons unclear, fired. And the boss came over to me and says, listen, if you can do the whole job on your own until I get another guy, I give you his salary. So you get double pay. Oh, okay, good. So I did that. And suddenly I found myself in a very luxury situation. I had more money than I had budgeted for the first time in my life. And I remember that I was sitting with a bunch of friends in a room she was not my girlfriend, but a girl had given a party and stuff. And with that friend, I was there. And she later actually became a friend of my sister, but that's a whole different story altogether. And she said to me, well, you don't have to go to Ireland. You can go to all kinds of places around the world now. I said, that's right. I can go to Indonesia. And she says, if you want to do that, you need to buy a ticket tomorrow. Otherwise it never happens. I said, yeah, damn, you're right. So the day after, I bought a ticket, which is the equivalent of about, say, £700. This is 1990.
Yeah.
So it was actually quite expensive, because it's about the same prices these days. And I went to Indonesia. I went backpacking around, and I absolutely loved it. And I was so lucky. I met a family in Indonesia who invited me to stay at their place, initially for a couple of days, and it became a couple of months. And I learned Indonesian, could speak good Indonesian. Then I met somebody who says, you got to go to China, because this is just after Tiananmen Square incident. China's just opening up. I went there, I learned Chinese, and I thought, I don't want to go back to Europe. I mean, Holland is, I don't know what it is at your place, but Warwick, right? It's rainy, it's cold, it's January, it's I was like, I got fantastic beaches here. This is an exciting region. I can speak some of the languages I started to learn in those days. So I thought, I want to stay here. I became a tour guide for some time while I was still a student. But the moment I finished my studies, I took a plane to Indonesia, actually, and looked for a job there. In those days, I thought I wasn't quite sure where China was going, but clearly China would have been a better bet to look for a job. But anyway, it doesn't matter. And so I stayed in Indonesia, and never really gone back. Always worked in this part of the world.
Yeah, definitely. And that quick stint in South Africa as well, I think, for a few years.
Yeah, 2.5 years. Yeah, it's also a great place.
Yeah, definitely. So I guess if you look at maybe the misconceptions of the Asian market, and maybe specifically Indonesia and other, I know you were in Taiwan as well for a few years. What would you say are the largest misconceptions that you see people make?
Well, first of all, if people think about Asia, they think about China. And one misconception is that people talk about that there is a Chinese stock market. Well, first of all, there is not one Chinese stock market. There are currently arguably 5 or 6, depending how you count a bit. The big one is Shanghai, and you can actually buy stock there through Hong Kong. That's called a Stock Connect. So in Hong Kong, you can buy stock that is listed in Shanghai. The second big one is the Chinese companies listed in Hong Kong. The third biggest one is the Chinese companies that are listed in New York most often, or elsewhere in the world, but mostly New York, on the so-called depository receipt, although a lot of them are canceling that and going back to Hong Kong. Then you got Shenzhen in China, in mainland China as a market. And then there's a new market, Beijing, that literally been opened a couple of months ago. So that's really small. So there are more Chinese markets, and they are different in composition. And they have different amount of money flying around in it. So they can move in the opposite direction. Even a stock, the same company listed in Shanghai and Hong Kong, there's a bunch of them. We call the Shanghai listing the A share listing, and the Hong Kong listing the H share listing, for H from Hong Kong. And they can move in opposite direction. And this is not always people understand that very well. But this is, if you're a bit of a trader, this is a way of playing Chinese stock markets, looking at the same company and trying to figure out how Shanghai and Hong Kong does, and then buy or sell in either of these markets to arbitrage to a certain extent. And that is one misconception. I mean, there's many misconceptions, but another misconception is that people don't look at markets that are offering actually great diversification. I think Indonesia is a great example. That market moves pretty much to its own tune to a certain extent. And yeah, I think people should pay more attention to that market. And yeah, it's not very often on people's radar screens, put it like that.
Yeah, and I found that interesting where you said, I think, India and Indonesia, they're not connected to China, because I think a lot of people think that maybe they're under the sphere of influence of China, maybe their market's connected, but they, as you said, they sort of move at their own devices. And you almost forget how big Indonesia is. I think you said almost 300 million people, and it's in the math.
Yeah, I know, you forget about it. By the end of this decade, Indonesia will probably be the 4th largest consumer market on the planet. Number 1 is China, number 2 is India, number 3 is the US, number 4 is Indonesia. It's a very big market, but not enough people pay attention to it. But just to your first point, you're right. So big markets influence smaller markets. So the biggest market on the planet is, of course, the US stock market. And if that one goes down, it drags down other stock markets around the globe very often as well. Okay, so be it. Then there are markets that are somewhat independent. So the Chinese stock market will be impacted if the US market moves from one day to another, but over a series of weeks or so, it can actually move up while the US market goes down. So that's not a problem. But China is big and influences the rest of the region. And that's in particular to those markets where a lot of the companies there just do business in China. Now that's Korea, and that's Taiwan to a large extent. So they move in tune with China much more than other markets. While India, actually most companies there have very little to none business in China. So yeah, they are not impacted. So if you don't like China, actually India or Indonesia is actually the same story. India and Indonesia are 2 good bets. And we saw this last year. China was underperforming and India performed very well because, hey, it benefited from that. People thought, let's take the money out of China and go to India. And we've seen money flowing into Indonesia as well.
Yeah, definitely. I guess we've seen a lot of the countries on the periphery like Vietnam as well, taking advantage of, I guess, the tensions between the US and China over the past few years.
Yeah, there's to a certain extent that taking place as well, that corporates say, hey, we need to go somewhere else to build our factories. They keep their factories in China, but a new factory is built in, say, Indonesia or Vietnam, and that allows growth there. And Vietnam has really, over the last 5 years, emerged as a key market in ASEAN. It's now more liquid than, for example, Singapore. And I think another market that's not part of ASEAN necessarily, but that will emerge over the course of the next 5, 6, 7 years, so is Bangladesh. If you want to be early in one market, go for Bangladesh.
Yeah, and I was reading the book and I'm like, hang on, I've never even thought, you think about India, think about Vietnam and all these countries, but you never think about Bangladesh. And I guess, where do you see the opportunities there? Obviously with not financial advice, but.
Yeah, no, see, Bangladesh is a very straightforward story, at least insofar we can see it at the moment. So let's take, for example, garments and handsets. Garments were initially made in China. Handsets were made in Korea. By, say, 10 years ago, the garment companies already said in China, it's getting too expensive, we're going to Vietnam. And the handset companies had moved to China at that time. It's a bit more kind of specialized product. You need more engineers and stuff for it. But they're now moving also to Vietnam, while the garment companies in Vietnam are moving to Bangladesh. And you now see that actually Samsung and LG, Korean tech companies, have started to put their toe into Bangladesh as well. So you see that industries sometimes follow each other as because they gradually go to low-cost places because, well, people like you and I, they want to buy stuff cheap, right? And Bangladesh sees therefore an influx of garment companies over the last decades. It sees now influx of tech companies going there. That creates employment. It means that very often one or two people in a household work. Instead of cooking a meal, therefore they go to a convenience store to buy ready-made meal, or they have a bit more money to spend. So instead of some cheap beer, they want to get a proper beer or craft beer. They trade up a bit. They go to restaurants. Eventually, go for a holiday. Yeah, they make a bit of money. They want to go somewhere. So yeah, that's what happens. You have a traditional kind of spending patterns. And that's most likely going to unfold in Bangladesh as well, as we've seen it in India and China and Indonesia over the course of the last few decades, actually. And so you can, then you can say, oh, I buy a Bangladesh fund, or I buy a consumer company or a bank, for example, that could benefit from all of this as well in Bangladesh. And there you go, sit on it and wait and hopefully see it rise over time.
Yeah, definitely. And I guess it's a story happening almost everywhere. These there's foreign investment, there's an increase in wealth in the country, increase in middle class, and increase of, internal consumption. And I guess that's
Absolutely.
sort of the classic play.
And very classic. And what do these people then want? They first have a motorcycle, and you get a motorcycle, you want a car. If you want a car, you then have a better car. And you want property, and you're going to put money aside. So you're going to go to a bank and buy a mutual fund. And it's a very classic kind of process. And this is the beauty of it. These things can, of course, go in reverse if something horrible happens, but you can almost see this happening. So what you do then, say, now, I think, let's say, some of these companies in Vietnam or Bangladesh or Indonesia, consumer companies, they look good. And then I've identified one, or a fund that, or an ETF that covers that, or something like that. Then you just wait and see until you think that the market sells down, and then all kinds of bad news is hitting it, and it's cheap. And then you just say, okay, I buy into it, because you don't buy in the short-term news, you buy for that long-term trend, right? And you just sit on it, and you can do very, very well.
Yeah, definitely. And in the book, you mentioned how Japan, Korea, and Taiwan are sort of at that stage where they've got elderly demographics. They're sort of at quite similar stages, I think, if I got that correct. But then we mentioned there that, Bangladesh has got a good demographic, Indonesia as well, very young, Vietnam is very young. So it's almost those countries are sort of in the late cycle, and these countries are in the early cycle of development and consumption.
Yeah, that's absolutely right. People often think about in demographics as being good or bad. So, North Asia, so Japan and China is actually aging, Korea and Taiwan as well. They said that's really bad. It's a bit like the weather. I don't really like rain, but is rain bad? Well, for a farmer, it's not. And it doesn't matter if I think it's bad or not. I should just have a raincoat, right? And then I'm well prepared. So it's how am I prepared for these aging things? Now, if you look at the Japanese stock market, there are three ways to invest in it. The first way is that it's got global kind of competitive companies, like your car companies, you know the Japanese brands, right? Secondly, there are all sorts of small cap companies in there who are really good at making something. So if you're a stock picker, Japan is fantastic. Yeah, we spoke about it earlier. But thirdly, you go for these domestic oriented companies that are at the front edge of, for example, aging. I'll give you an example. There's a company, it's also mentioned in the book, that creates a kind of, I don't know how to call it, maybe you can call it a robot or something like that, that for all the people who struggle to walk but could still walk, but they need support, normally you have a stick, but they've created something that you can put around your waist, and it, like a stick, it helps you to balance. So if you fall a bit over or you're unstable, it rebalances itself. Now, that is extremely helpful, because it means that now I can still walk, but in 20 years' time, I'm over 70, maybe I struggle with it. It allows me to stay mobile. I'm not going to sit at home. It means I can work, I can still see my friends, etc. Comes with all sorts of benefits. So I would like to buy something like that. Now, these companies are the cutting edge of aging technology, if you want to put it like that. And you can buy them in Japan. There you go. And again, you look at it, when is it cheap? Hey, and then you pick it up. And most likely, if they can do it in Japan, by the time the Chinese, or hey, by the time you or I become old and we need that stuff, the market will be much bigger than it is at the moment. So these companies might well do very well. Yeah.
Yeah, it's really interesting. As you said, all countries are sort of going that stage, especially throughout Europe as well. Old demographics, more need for care, And that's another thing that you mentioned, that, you know, the robots there could help with care, could help with all these different things. So there's so many opportunities available there.
Absolutely. And this is happening in Japan, but it's also happening in Korea and Taiwan. They're aging very quickly. China is not an aged society yet in the sense like Japan and Korea and Taiwan are, but give it 10 years, it will go there as well. And that's, of course, a humongous market. So I can see that demand for certain kind of products related to aging will do very well there. Yeah.
Yeah, definitely. And, you know, we mentioned before that there are separate markets and they do sort of go on their own accord, but are there any trends, I guess, that people should be watching for the region just to be aware of in case anything were to happen? Or
well, there's a couple of trends to be aware of, I think. First of all, what we see across the region is that in many countries, policymakers want to be self-sufficient. So, for example, in China, they are dependent on foreign supply of energy, oil amongst others, and gas, food, and semiconductors. So they'd like to make sure that they can produce that themselves. So what is China doing? It is creating policies so that it's very easy for local companies to develop that, you know, tax cuts, tax breaks, subsidies, you name it, right? So that means that you get good growth in those industries, food, energy. So think about solar and wind, renewable energy in particular, they're really big in, and semiconductor equipment. You can invest in that. But Japan, India is doing this as well because it's big in pharmaceuticals, and it says we want to be self-sufficient in pharmaceutical ingredients. So that they're developing that. So that's one trend. Another big trend, of course, is simply demographics going around. We just spoke about that, right? The advantage of demographics is very visible. I know for sure that in 10 years' time, you and I both will be 10 years older, right? And our spending patterns will change. I might need a stick or a robot. You're still in your early 20s, I believe. You'll be in your 30s. You'll be thinking about maybe buying a car or a house or something like that. So that gives you a lot of certainty as well. So demographics, technology, are some of these key trends that you can take a look at.
yeah, definitely. And as you said, they're sort of obvious everywhere and they follow similar patterns. But in your opinion, there's so many markets that you mentioned. I think you sort of do quite a good explanation of 10 or probably more. Is there any market that you think is underrated or that you think doesn't get enough maybe time given to it or research, or maybe Bangladesh or another one maybe?
Yeah. No, I think there's a couple of markets that are underrated in the sense that people don't look enough at them. All the attention goes to China for good reasons. It's large, big, there's lots of companies around, right? So, and as I said, there's more than one Chinese stock market, so there's plenty of attention to be paid to it. I think India is sometimes underappreciated by retail investors. They like to go to China, but India over the last 20 years has done twice as good as the S&P 500, the American market. It's up 10 times almost. So it's a market where you have highly profitable, very good companies. I would pay attention to India. I think the market that is really underappreciated would be Indonesia. So I said it's by the end of this decade, the fourth largest consumer market on the planet, but not a lot of people that go there. Indonesia, Bangladesh, Vietnam, and the Philippines probably as well. Those are markets that don't always get the attention that they deserve, I think.
Yeah, definitely. I think that's great advice. So in terms of, I guess, maybe looking at your strategy in terms of researching investments, what would that look like? I'm not sure if it's mentioned in the book, but
in terms of how we do strategy?
Yeah, in terms of how you do strategy and sort of what you're looking for. Is it trend-based? Is it individual companies?
Oh, yeah. We do, I would say, broadly speaking, three things. The first thing that we do is tactical stuff. Hey, one market goes up, the other one goes down. They normally trade in this range. Therefore, you want to sell this one and buy that one. That's tactical stuff. The second kind of thing is I do is thematic stuff, like demographics is a great example. Yeah, but the rollout of renewable energy across the region. So that's a big thing as well. And the third thing that we do is simply market calls, not so much in a very near term, but on a 12-month basis. Which markets look good? How's the growth looking, the valuations? That's actually where most of our attention goes to. And we look at markets not as very often, this is also in the book, as economies. People very often say, I think market ABC will do well because the economy of ABC is doing well. In Asia, the local economy sometimes got nothing to do with the stock market. you have to look at these stock markets as, basically, in technical terms, discounted cash flows. Large groups of companies, and you take all their cash flows. But in absolute terms, what you do is you just look at the makeup of this market, take all the companies together, figure out what happens with their profits. That's one thing. And we pay a lot of attention to the bond market, bond yields, because that is it. Stock markets is not only profits this year, but also future profits. But a profit that I get in 2050 doesn't do too much to me. I need to discount that, right? And that discount rate is, we get these from bond markets. Bond markets are kind of discounting machines, if you want to put it like that. So we look at equity markets like humongous, large earnings discounting machines. So you got to understand the earnings, and you got to understand what happens with bond yields. And if you do that, you see that moving. So, for example, if the earnings go up and bond yields go down, it's good for markets. If earnings go down and bond yields go up, that's bad for markets. And all kinds of things in between that then makes these markets move up and down a little bit.
Yeah, and you mentioned how they're, a lot of these countries and specific, maybe not countries, but specific companies are very, commodity prices and US dollar price can really impact their currencies as well as sort of the markets as well, I guess. So I guess how could someone analyze that?
Well, if you have a bit of a view on what happens with the dollar, a lot of currencies in Asia follow the dollar. The Singapore dollar, the Taiwan dollar, Korean dollar. I wouldn't follow strictly, but they don't. They move like Hong Kong dollar is quite strict, but a lot of them don't move too far away from the dollar. But there's a few other currencies where they do. Indian rupee and the Indonesian rupiah, for example. That creates kind of volatility and excitement to the market. So if the dollar gets really strong and the Indonesian rupiah sells off, that creates opportunities in these markets very often, because you buy stocks cheap, but in particular because they're quoted in rupiah, in dollar terms, they're really cheap, or pound terms if you come from the UK, right? So that can be a kicker for you. And then if things go well, then not only do the stock prices go up, but the currency moves as well, and suddenly you get an added kind of bonus to your performance. So that's where the excitement can lie. It can also go the other way around, right? And hurt your performance. But it's in particular the case in Southeast Asia, I would say, Indonesia, Thailand, and India.
Yeah, it's interesting. So are we sort of seeing that now? Because obviously Fed are looking to raise their interest rates potentially 3 or 4 times. Do you think that will have an impact? Yeah.
Yeah, but this time around is slightly different than what has been in the past. So yes, the Fed is most likely going to raise interest rates. The markets are anticipating that. This is why stock markets have been weak. Under normal circumstances, that would mean that the Indonesian rupiah would be quite weak, for example, as well, the Indian rupee. But what we see is that Indonesia is a great example. Indonesia is chock full with nickel, and nickel is used in batteries. And batteries, everybody needs batteries because of electric vehicles. So electric vehicle companies and battery makers are setting up facilities in Indonesia. That means money is flowing in there to build that up. And that supports the Indonesian rupiah. So they don't have to defend their currency as much as they did in the past. That means they can keep the interest rates low, and that's very positive for the Indonesian stock markets. And it's one of the reasons why a market that we like at the moment.
Yeah, definitely. And I think coal as well. So they've really
coal prices are higher up and stuff, so that helps Indonesia as well. So at the moment, there's a lot of things going right for Indonesia from an equities point of view.
Yeah, definitely. It's super interesting. So I guess, we mentioned before how high retail investing is in many of these countries. And I guess another period that it was as high as, you could say, late 1990s Asian financial crisis. And maybe a lot of people were, they obviously lost a lot, and they were probably scared out of the markets for quite a while. So I'm not sure if you're seeing any similarities to what happened then. Or...
No, it's actually a bit different. In terms of investing in those days, most investors were basically New York and London-based emerging market funds that had people in England or in America move money into some kind of emerging market fund, and they then invested in places like Indonesia or China, Korea, and India. The problem, to a certain extent, is that if, for example, Argentina or Turkey has got a problem, then people say, "Oh, we got to sell emerging markets," and then, or the fund manager had to sell was losing money in Korea, in Turkey or Argentina, and then he would say, "Okay, I need to take the money out of Indonesia or to fund it or whatever." So Indonesia could be impacted because Turkey went down. Now, if Turkey goes down and has a problem, then if the majority of your investors are local, They might read it in a newspaper, and they're not going to sell the Indonesian stock market. There's no connection there, right? So the contagion effect that was so big in the 90s is probably a bit more muted these days, because it's not just emerging market fund managers that invest there, but it's the locals as well. And that changes the dynamics of these stock markets.
Yeah, and I think you mentioned that Malaysia is very, a lot of the locals don't sell that much, so it creates a bit more stability.
Yeah, Malaysia is a country which has got a very well-developed pension system, unlike in most other countries across the region. That means there's a lot of local money that automatically goes into the stock market because people have to save in a pension fund. And that has clearly stabilized that market. It's one of the most stable markets in the region. So if you are an Asian fund manager, for example, and you think the markets go down, and Malaysia is a place that people use to hide, because that doesn't go down too much. Because if it does go down, they know that the locals are going to buy it up again. Yeah. But this will increasingly happen in some of the other markets as well. And therefore, one of the reasons to buy Asian stocks for the longer run is buy now before the Asians come in and bid it up.
Yeah, definitely. It's super interesting. And as you said, there's just so many dynamics between all the different countries. So I guess, it provides volatility, it provides certain safeties, it provides sort of all the things that you want as an investor.
Yeah, it provides a lot. It's extremely diverse. It's extremely exciting. It's one of the biggest kind of consumer markets developing on the planet. And if you put a little bit of money into it, it's a great way to stay on top of it. And of course, I hope that people enjoy the book and read it so that they can learn about these markets in a very easy way.
Yeah, definitely. And I've done quite a few interviews, talking about specific countries like Vietnam and sort of China as well. Those are the two. But I think this book really provides an analysis of, almost all the countries that you need. And because one thing I have noticed is there's just all these little intricacies involved, little things about culture and, a lot more that you need. You can't just look at the the finances and think, oh, okay, that company looks, as you said, discounted cash flow. It looks valuable, but you have to look at the other things as well.
Yeah, and this is what I tried with the book. I mean, this goes back to the very beginning, what we spoke about. My friend, the pilot guy and the dentist guy, right? So they have no finance background. They're not interested to read how you construct a discounted cash flow, or how you can what the correlations between earnings growth and GDP. But they would like to know these stories. So I've tried to use in each of these markets a story. In one place, even the dangdut, which is a particular Indonesian music type, in order to link it to how these places operate, how they are, and therefore why these companies are as they are, kind of thing. And hopefully through the stories, it makes it a much more easy to read book.
Yeah, definitely. And I guess for anyone who maybe wanted to, maybe have a career in Asia in terms of in the finance markets, or just in finance in general, I don't know if you have any advice for them.
Well, first of all, my advice would be read my book. But it does give you a very easy intro into the region. Secondly, if you are a early 20s student and you want to do something in Asia, now normally I would say get on a plane, go to Asia, travel around, look for a job, and see how you can make your way into the industry. It's a bit more difficult now with COVID and traveling and stuff like that. But there's a couple of ways whereby you can very easily stay on top of what happens in Asia. There's a magazine that's completely free, comes out every week, and it's called Week in China. You can just download it, go to their website, become a member. It's free, and it gives you a good feel. It's very easy to read of what happens in that place. So that's an easy way to do so. And then, even if you stay in wherever you are, London, Dublin, wherever you are, right? You want to do something in Asia, just see if you can make a connection with a company that operates there and just express interest. But if travel comes back, just come to Hong Kong, Singapore, go to some of these markets and look around. There would be jobs around.
Yeah, definitely. But it is so easy, as you said, to invest now. Like even in Vietnam, it used to be quite difficult, I think. But now it's,
you can just sit in your literally now in your little pub somewhere, right? And buy stocks in China or Hong Kong or Korea or Vietnam. When I was a student, I remember with a friend of mine, we went to a bank to see if we could set up an account, and the bank looked at us and said, "Bugger off! We don't do that for students. You don't have enough money." So it was very difficult in those days, but now it's really easy.
Yeah, definitely. So Herald, thank you so much for doing the podcast. And just on to my last question, I guess, what is one message you'd like people to take away from the book, or just our interview in general?
I think if there's one message I'd like them to get away from the book, is that this region is extremely diverse and exciting. There's a lot of stuff going on. And yeah, I hope in a sense that the book allows these people in a very easy way to appreciate this region to a certain extent a little bit better. That's it, and appreciate stock markets. And maybe another message, not one message or two messages now. I think in general, people need to invest more in stocks than they think. A lot of people are afraid of investing in stock markets. They think, oh, it's going to go down, I could lose money. That's right, but it's a fantastic way to save money, better than I think property or other assets. So in particular, if you're young, be early, put some money into markets, follow it, don't trade too much, just stick with it. And you'll see that that can work out very well for you.
Yeah, exactly. Despite what everyone's telling you, you have to be patient. I think
Yeah, you're going to be patient. That's can't do anything about that.
Yeah, but yeah, I think most of us have to learn the hard way, unfortunately. But so Harold, as you said, we've got the book. So if anyone wanted to buy it, would that be Amazon and all other bookstores?
Yeah. So the book is Asia Stock Markets from the Ground Up. It's available on Amazon. In the UK, it's Waterstones and WH Smith carry the book, and there's a bunch of other websites as well. So it's fairly easy to get, and there's on Kindle available as well.
Perfect. And then if anyone wanted to follow maybe your work online or anything that you post, what would be the best way?
One more thing in the book, by the way, that the proceeds of the book go to a charity to help people with financial literacy. So if you buy the book, implicitly you're helping out a little bit as well. Yeah, if you want to follow us, go to LinkedIn. We post on a regular basis on LinkedIn on views on markets and these sort of things. So that's an easy way to continue to be on top of what happens in Asia as well.
Yeah, perfect. Well, I'll put all the links below to buy the book. So everyone, I would recommend it. It is a very good introduction to Asian stock markets. I've done a bit of research, but I think this just explained all of them very well. So Harold, thanks again for joining the podcast.
Thanks for having me on.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.